Okay, hello everybody. So this is March the 13th, and we are. This is a new show that we are going to do on Thursday at this time, and so we are going to discuss the market like I usually do, using the power law indicators. But I have with me the Minotaur Trading System team, and I will introduce you in a moment, everybody. So this is a group of people that I mentioned before in my post, and I'm working very closely to them to develop systems where basically the idea is to use a portion, because I know that this is a sensitive topic for many people, because many people in the Bitcoin community wants to focus on hodling. We are all hodlers. The main difference is differently from other people that suggest, to be always hodling and not doing anything else. We want to use a portion of our investments to use the Bitcoin volatility, because Bitcoin has the both characteristics. It's a very good long-term investment, like all of us think about that. At the same time, it has a lot of volatility, and we can make friends with this volatility. And then, over time, we can use the gains from these things that we want to do with the volatility to actually get more Bitcoins, because that is the goal, right? We want to increase our Bitcoins. So this trading system, we can go a little bit deeper. I will let the team describe it to you. And they are part of the show because every week they will help me to analyze the market, because all of them have the different skills in understanding the market, in general, but in particular with Bitcoin. And also we will bring up what the algo did, because we want to show you the different trades that the algo did. We will get some insights in that too. So we are going to integrate this analysis together, and it's always better to have more than one person looking at all this data, trying to understand what is going on, figure out where we are going next, and so on. Given this, let me introduce. In fact, I will ask them to introduce a little bit themselves, Marcos, Costa, Sebastian. So if you don't mind, starting with Marcos and then Costa and Sebastian, to explain who you are, if you don't mind, and your experience with the market, and then maybe Costa can give us a little bit of introductory explanation about the trading system and what it does. So,
Yeah,
Marcus. Costa, maybe you can start.
I'll do a quick intro of the team. Yeah,
Yeah.
so Minotaur Trading Systems, we've all been working and developing trading strategy for the last really 2 years. It's taken a lot of work, a lot of hours, a lot of testing, but we've built something that we believe is able to handle the volatility that Bitcoin gives us in an opportunistic way. Um, Volatility becomes our friend when we're able to, harness its power. And again, it doesn't replace hodling. It doesn't replace long-term strategies, but there is an opportunity in front of us. We have a financial instrument that, when you follow the work of Giovanni, is moving in a predictable way. And sometimes we joke that it's, crashing upwards to the right. By working with the power law, I guess one of the things I wanted to, a lot of people wondering, what does our system have to do with the power law? And I guess is that having the power law and Giovanni's work really enabled us to unlock the true potential of what we were doing. I'll pass it to Sebastian and Marcus in a second to discuss exactly how the algorithm works. But the power law itself gave us a framework in order to really create a robust risk management strategy to implement to the algorithm itself. just imagine if you're looking to trade an asset and you have the full range of price, it's very difficult to optimize, right? But when you have the power law, you start to understand that there are places that the price is probably not going to go statistically, and also it's just never been there. There's below that power law support, looking at Bitcoin's history, it just hasn't gone there. Also, there are certain areas at the top where we know it's probably not going to go to. The top doesn't really matter too much. It's more so that we like to focus on the support. So giving us that framework allows us to create a much tighter price coverage and allows us to get those kind of returns we like to see on our most conservative settings anywhere between 2 to 3% per month or more. Now, there are strategies where you can, depending on where in the world you are. I'm in Australia, Sebastian's also in Australia, Mark's in the US, and then Giovanni's Italian, but from the US as well. So our system is plugged in through TradingView and connects to most centralized exchanges. We're also working on a decentralized version of our system as well that's going to be rolling out soon. So we're making, hopefully, this available to anyone who wants to be a part of it. And yeah, we're really happy to be working closely with Giovanni. He's actually been running the system nearly for a year. I think we met, we'd been talking for a while, but we met in person in the Bitcoin conference last year in Nashville. And since then, he's been running the algorithm. One of the things that I really respect about him is that he didn't want to actually talk about us to anyone until he'd really, really ran it for a long time. He wanted to test it in when the market's going up, when it's going sideways, when it's going down, and we can have a look at the crash recently and how we've managed to take advantage of that. But Giovanni has been very patient, and he's wanted to, like I said, crash test what we've been doing. And he believes now that we're in a position to share what we're doing together. And we're really happy that we're able to work together. But I'll let Sebastian and Marcus take over. They're part of the team. Marcus runs our trading desk, and Sebastian is our chief technical officer. And yeah, they'll go over through a bit more. Unless you want to take over, Giovanni, do some of your updates. We can quickly go into how the algorithm works on a macro.
Yeah. Let's do that first, and then we can talk about the market and so on. Yeah. Go ahead.
Yeah, sounds good. So Marcus, I'll give a quick overview, and then you can kind of discuss the trading desk and what you do. But yeah, hi everyone, nice to meet you. My name's Sebastian Raphael, and I'm the Chief Technology Officer of Minotaur Trading System. So I oversee all the primary development and run our main development team as well, where we develop the algorithms in-house. Essentially, I've been on a 10-year journey far before I met Costa, trying to understand what is possible with Bitcoin, and I guess how can we run systems and strategies in an intelligent way that can get a realistic yield. So I'm like probably a lot of people in this chat, I'm a hodler at heart, but I'm also a trader, and I've felt all the ups and downs that traders do. In my early years, I've done trading with massive leverage and crazy things and blown accounts, all on the journey of understanding what is actually realistic with Bitcoin and what can we actually do. Now, meeting Giovanni, we did have a good system in place already, but I guess what we didn't have at the time was a clear understanding of, the long-term vision of what Bitcoin can potentially do going up, but where it can also fall potentially at the bottom. And like Costa kind of mentioned, Giovanni has given us this incredible roadmap to understand that, as long as we can know where the power law bottom is at all times, we can create our algorithmic system around understanding and respecting that. And not just respecting that in the sense that price can fall to the power law bottom. It's respecting it in the sense that we've now developed the algorithm to actually inject most of its capital when the power law bottom gets hit. So all of a sudden, what you have is a system that is built for downwards pressure. And this is very unique, because I'm sure everyone in this chat will know, if you've traded, when price is going up, it's a very, very favorable condition. That's very, very easy to trade. But the problem is when price is going down, this is where we see a lot of, liquidations and errors in understanding how to execute trades correctly. So at heart, what we've built here now, having Giovanni as a part of, a partner and a part of the team, is an algorithm that's built with the power law in mind at its heart. All the trading will happen irrelevant to that. All that matters is where the power law bottom is. We tune the power law bottom to be our level where the majority of the capital gets injected. And essentially the algorithm has the ability to cover massive amounts of Bitcoin's price. So all of a sudden you're in a position where you don't need to be over leveraged. You don't need to be doing crazy things. And you have a safety net for Bitcoin to have black swans, massive crashes, and still be able to make money regardless. Now, this doesn't mean, and I want to be really clear on this doesn't mean that the system is a perfect money printer that you turn on and you never have to work again and you're set for the rest of your life. Like this, this is not get rich quick. I want to be realistic about this. When this is done correctly, the value is you can get the price appreciation of Bitcoin and you can earn a couple percent yield a month on top of that. Now, that being said, the system is very, very robust. So you can really tune it however you want. If you want it to be very, very aggressive, you can do that. And, Marcus has a way of taking the system and doing things with it that are very unique. And this is where he, is very skilled. But for anyone just looking for a system that can protect their capital and trade with the power law bottom in mind, it's a very, very powerful thing. But Marcus, I'll let you take over now, and thanks everyone.
Hello everyone, my name is Marcus Holloman. First, I'd like to thank Giovanni for inviting me and the team to be part of this live stream tonight. My background is coming from the institutional and investment side. So when I first was introduced to I came just like any other customer. I was looking for a way to automate my trading systems, and coming from institutional trading, working in the brokerage business side of it, the main at the time, more and more automation has been coming to the markets. There are more algorithms, there are more high frequency trading systems and machines dominate the market. They dominated it 10, 20 years ago, electronic trading systems. And now they're somewhere around 95% of all trading volume is electronic. And the discretionary trading environment is almost the way of the dinosaur. So in an environment that is dominated by bots and algorithms, it's almost impossible to compete or to be profitable if you don't have some type of algorithm working for you. So in an environment dominated by machines, you better have your own. So I was actually looking for an automated system that was affordable from a retail perspective. And I came on like a customer over a year and a half ago, and I joined the team to come on and actually help. My job is I actually help to test it from a trading perspective to make sure the performance is adequate, that it's doing, that it can work profitably. Um, Sebastian and the development team, they make it, I break it, I try to extend it, take it to its highest limits. That's my job. And I run the trading desk in the company, and I help other members get more higher, better results. So the power law that Giovanni has developed it's like our algorithms are our automated autopilot system, and Giovanni's power law is our radar. It's our visibility. We use it to give the framework, and it provides the rails that we run the algorithms on. So it's a very, very good marriage between the two, and they work well together.
Fantastic.
Thanks. Yep.
Okay, so the Minotaur group will go in depth on the last moves of the algorithm, so you can see the logic. So that is part of what we are doing in terms of the analysis. But let's start with the usual power law indicators, right? We develop these indicators. You can join our Patreon. I will have links anyway, so you can see right now the link for the if you want to know more about the trading system, you can watch a seminar. So if you use that link, you will we dedicated almost 1 hour long video to explain a little bit more in depth how the algorithm works and so on. So you can watch that seminar, and then if you want to talk with the team, you can book a call with them there are instructions in the link. I will also add these instructions on X. I will add them on the YouTube video. And if you're interested in the indicator, like always, if you follow my show, you can join us on Patreon. All these indicators that I'm showing are also available on Patreon, and we'll have a link in the videos, so you can watch them later. But anyway, so this first indicator that I want to discuss is we call it cycle comparison. So basically, what I did here. So first of all, we have a kind of overall picture. It's almost like looking at a globe, and the globe gives you a feeling of the overall structure of the Earth, the different continents. So this has kind of a similar idea. So, and it's based on this regularity that we observe over the years in Bitcoin, right? So first of all, the main signal is the power law, and here the power law is shown as this white line that goes through the middle, right? And everybody familiar with my work, you know what the power law is about. Is this long-term behavior that follows. Basically, it's a simple relationship between price and time. So price is proportional to the time to the 6, right? That is the idea. And then we know that there are these bubbles, right? These deviations from the power law that they have a structure. They don't happen in a random way. And the main structure is the periodicity of them. So here I'm attempting to show that the peak of these bubbles happen more or less at the same time. It happened 3 times, right? This is the pattern that we observe. There is some question about this one, but so sometimes it looks like both here and here we can have early, basically a double top early on, and again they seem to happen more or less at the same time, kind of around April, and but the second top, seem to be very regular, and they usually are in quarter 4. They never happen after the end of the year. So this could be something different. For example, for this cycle, it's possible that we have a cycle where the top happen after quarter 4, but usually they happen during quarter 4 of that single year, because it's about 1 year where we go in this bull market where we deviate from the power law and we go much higher. Now, over time, again, if you're looking at what happened in the past, the deviations are becoming smaller and smaller. And in fact, what is surprising with this decay in the deviation from the power law is also regular. And in fact, they follow an exponential decay. Now, you could take seriously, because it's really 3 data points. So it's difficult to do stats with 3 data points, right? If you only add 2, there is no stats. But with 3, in theory, you can do stats. We use whatever we have. And if you take it seriously and say, well, given the decrease has been following a very precise pattern, what happens if the next bubble also follows this pattern, right? And this is how we are able to determine where we are expecting, both from a temporal point of view, right? This region. So imagine this more than being a real line, is like a little region. In fact, this is why we talk about quarters, because it's more or less a couple of months, 2 or 3 months, where anything between, let's say, October to December, where we are expecting the peak to be. If always under this assumption that these patterns repeat, that we are going to see something similar to what we have seen in previous cycles. So under that assumption, the next top is going to be at the end of this year, so quarter 4 2025. The deviation we are expecting, that is calculated from how fast this decay has happened over the years, is supposed to be 80%, right? The first deviation was almost 10%, when we had 5 and we had 3. Now the deviation is supposed to be 80%. If because by power law alone, right? If we follow the power law pattern, by the end of the year, we will be 130. So if you add 80%, we get 200K. And you can see under this kind of overall picture, basically looks like we have 1 year where we go up. We even use this terminology of time. So we say time 9, 12, right? So it's like a clock. At 9 o'clock is when the cycle starts. 12 is the top, 3 is the bottom. Every 3 hours corresponds to 1 year. Then there is a period of 2 years where basically we stay at the support level. So Costa mentioned many times this idea that there is some kind of support. It's supposed to be about 60% deviation from the trend, from the power law trend. And historically, this support has never been violated. In fact, yesterday we were discussing with the team that even under the COVID crisis, right, that disrupted supply chains and the market, the entire market responded crazily. I don't know if you remember, guys, but oil, we were basically telling you, we give you money if you buy oil. If you get oil, we are paying you money, right? The oil price went negative. It is completely absurd. And Bitcoin arrived there to the power law support and it stopped and it bounced back. So it's kind of a stress test. This is why, the Minotaur trading system really takes seriously the support level, because as being over the year, one of the strongest values from understanding Bitcoin in terms of a power law. We never went below it, or if maybe we weaked very quickly and then we come back. And so this gives us kind of a unified picture of how Bitcoin works, at least so far, right? That doesn't mean that it will continue to do that, but it's at least a map and a guide that help us to compare what happened in the past, what happened in what is happening now. And you can see how this chart works, right? Basically, I'm superimposing here all the different cycles. So as you go lower, you're seeing what happened exactly in the same month, but 4 years before, right? So this was the previous cycle, this was the cycle before that, and so on. And you can see here what was happening at this time in the previous cycle. So, for example, the last cycle, we were going up and up and up because actually we had this early top, and that early top was reached around April. So we were really in a very exciting and crazy bull run, going up very, very quickly. Now, if you go one cycle before that, we kind of were leaving the support going up. So it was pretty bullish move, but we didn't even cross the power law. So that is probably one of the hints to understand what is happening right now, is because in both cases, right, there was some kind of a reset that brought us down to the support level. And in this case, we had the ETFs that push us up. We kind of had this fake out where we are not supposed to go above the power law. It happened here and it happened here. You can see every time that happened was some kind of a correction. Here the correction was so big because of COVID that it was almost like a reset button. We didn't have that resetting. We had a correction, but then the election happened. People got excited about that. It looked like we were in a very good spot in terms of repeating previous patterns. If you look at this lower panel, I'm actually subtracting the power law so you can see what is left over after the power law. You can see here how the current cycle was almost identical to the previous one initially, and then they deviated. When you see flat in this chart, it means you're following the power law. So it was actually following the power law. That is good, but during a bull market, we're expecting a deviation. So something was already weird. And then, I think I will say I don't like so much to attribute causes to these charts. I'd rather look at the data. That is my style, and try to compare the math, without giving an explanation. Oh, this is due to that, But it's obvious because of what is going on that the market is responding very strongly to all these idea, the tariffs. So actually, I'm pretty surprised how resilient Bitcoin has been during this time. So there is this correction. We can have a discussion as a team if we think the bottom is in, if we are going to see other correction, if we are going up. There are some relatively good signs, in particular in terms of liquidity, that we can discuss in a moment. But this is where we are, and you can see it does look different, right? So we say the only thing that we really can do in terms of looking at the cycles is comparing what happened in the past and what is happening right now. So it does look different. It's not different enough because yes, we have this correction. Now, did it ever happen that we went below the power law? It happened once. It's just that in that case, we stay there a couple of days, below the power law, and then we went up. In fact, the market reacted very violently to that correction, where it was actually it continued with even more bullish behavior. We don't see that right now, right? We are staying here for a little while. My conclusion about this is not different enough to say forget about recycle. Recycles are not going to happen anymore. I think there is still a possibility, and one of the calculations that you can do is that how much it's going to take us. If we started today, for example, and we still have this target of 200K, we will have to do something like about 0.3% per day. That is not unthinkable. It's a pretty high, compounded return, but it's within the realm of possibility, right? We are not asking Bitcoin to do anything crazy in comparison with what it did before. Just to give you an example, last time, in fact, actually not talking about from here to there, but actually from here to here. If you look at this line, if you calculate what will have been the compounded returns to achieve this goal, we did something about 0.45. So it will mean that the performance that is required from Bitcoin it's actually less than what we did last cycle. But it's consistent with this idea there is a decay of these peaks. Now, by the time we arrived in June or July, by the time we got to June, if we want to reach 200K, we will need alpha percent a day. That starts to be quite challenging because if you are talking about alpha percent a day, it starts to be almost in scam territory, right? If you ever have a trading system, let's say, if I ever hear Minotaur say, hey, we can tell you we make 1% a day, right? It means a scam. That is usually a scam. So it's going to be more and more challenging for Bitcoin to reach the 200K if we need 1% a day, right? And June will be more like alpha percent a day. That is quite, it's going to be a very strong bull run to make us go back to 200K. But I think we will have a better picture by June. So far, I think the market is still processing this idea of the tariffs. We can look at liquidity for a second, but I wanted to ask the Minotaur team to maybe comment or say anything about this, in particular Marcus, because he has a lot of experience in markets and from his institutional professional experience. What do you think, Marcus? What about these? We cannot hear you, unfortunately. Can you check your?
Yeah, I had it on mute. Yeah, sorry about that.
Yeah.
Fundamentally speaking, liquidity drives the market. It's the gasoline, so it fuels everything. And I agree with you, Giovanni, that I think we got a little bit ahead of ourselves with some of the ETF and then the news surrounding the tariffs and all the uncertainty. I think the natural liquidity flow was interrupted. Some of the traditional institutions probably pulled back a little bit And I think all that, the beauty of it is Bitcoin, as you have highlighted in all of your studies and everything, and your test, it's like a living organism. It doesn't perform like a traditional asset. It's almost alive, and it runs on more natural physics. So that keeps it on schedule. And no matter how different types of outside um, issues or outside circumstances that might seem to knock it off course, it just tends to get back on track. So I would think that everything is on schedule according to your power law. The time and the depth will be executed on time, like it seems to always happen. So definitely, I think we're okay.
Yeah, and what about you guys, Costa and Sebastian? What is your opinion on this?
I'll quickly chime in, Costa, and let you go. But I think in my experience, I've seen a lot of bull and bear markets, and the funny thing is, it's not like the current kind of correction we've seen isn't abnormal for a bull market, right, Giovanni? Like, we do see pullbacks in bull markets. This does happen, and I think the quickest way to get emotional is to assume because we're seeing a correction that the market is dead. But let's not forget, guys, like Bitcoin hit $110,000. I mean, it wasn't that long ago where me and my friends were saying, wow, if Bitcoin ever hits 20,000, that would be remarkable. It's currently $81,000, right? So I think just the assumption that because we've had a correction that Bitcoin's dead or Bitcoin's going anywhere, or like, look, there is potential concerns looming with tariffs and recession, but look, there's always news events happening, always, right? In every bull and bear market that, there's always things happening. So the point I'm trying to make is, I don't think this is that much different than things we've seen before, and we've seen corrections bigger than this before in bull markets, and then seen full recovery too. So that's where I'll chime in, and Costa, you can speak as well.
Yeah, just broadly, as a company, our number one priority is to protect our clients no matter what happens. So we do have this roadmap in front of us. However, sometimes you take a wrong turn. Sometimes things don't go to plan. So what we work on and what's the number one priority is capital preservation and risk management. If the bull run continues, it can go to 200, 300, 400. That's great. We're going to make money. That's easy. The problem is if it doesn't, what happens if there's a black swan event and then another black swan event and it crashes the price down? We want to make sure that our clients will not only be safe, but actually be able to generate returns through that period as well. And I will jump eventually into our own indicator and show you, because it's such a good timing, how we've able to walk with this price all the way down and generate returns, outperform the buy and hold. And, you can use the algorithm, you can have your Bitcoin that you're holding. You can use this system just to generate cash flow. It's really good for that too. You can see that it's much more predictable than timing the market. So to cut a long story short, of course, we all want a strong bull market. We want it all to happen. But as a company, we need to make sure that everyone's protected, that everyone's safe. That's the number one priority. And if we can make money while we're doing that, that's fantastic.
Yeah, and this is why I was so impressed by your system, because these situations where actually price is correcting, now they became opportunities, because the system is there without you doing all the worried, about what should I do next and so on. It takes this opportunity for price correction to actually buying down, right? Because it's a clever way of doing DCA. When we are going to show the trades, you can go deeper in that. But my understanding of how the algo works is basically when there is a major correction, the bot is trying to buying down and DCAing your positions. Then when it's going to be unavoidable, because we know what happens, right? I know it sounds, there is a small little piece of us, at least I talk about myself, right? And I have been on this for 12 years. There is always a little voice that say, oh, no, maybe, this is the beginning of the end. Maybe Bitcoin is going to zero. I don't think so, right? Because I am one of the most bullish people that you can meet. Reasonable, right? Without going FOMO. But, there is always that little doubt. But then you actually almost I'm not saying welcoming, because of course during a bull we want to see the price go up, but these corrections are opportunity. They became opportunities, and this is why it's good to have something that is automated, that is taking out emotions, from you. And so this is why I'm very grateful about this system, and I am there with you, because I will never suggest you to use a tool. You have to understand all these things that we are discussing as tools, right? I would never suggest a tool that I don't test myself. In fact, all the team, we are involved ourselves. We put our money where our mouth and brain is. We are involved with this ourselves. And discussing about liquidity, right? First of all, Marcus, a very nice chart about local liquidity. I don't know if he wants to show us some of these liquidity chart, but it's up to you, Marcus. They're slightly different from mine, because his are more about leverage positions and so on, but a very interesting charts. This one shows this model. I built this model where I was looking at a long-term relationship between global liquidity using many different metrics, not just M2, but about 14 different metrics. And when I look for a relationship, it didn't seem that it was a simple relationship if you take the entire history. So I'm using basically what is called a polynomial expansion to catch this relationship between the two. Now, I did post yesterday a revised version of this model, and I don't have yet an indicator, but I'm going to develop one. And that one is focused on a more, basically the data since 2014. So if you focus only on 2014 forward, then in particular with M2, the global M2, there is actually a power law. There is a power law with a power of 9. That is crazy. So basically shows that as liquidity goes up, Bitcoin multiplies, right, in a nonlinear fashion through the power law, that liquidity, and a small change in liquidity means an enormous change in price. It's pretty amazing. And I'm going to work on that indicator soon. But it's very similar to what I was going to say, just looking at this chart, that as liquidity goes up, we are expecting, and in this case, I'm not showing any delay, but there is some hint that there is actually a delay. There is and there is a debate what that delay is. Is it 5 weeks? Is 10 weeks? Is anything between 5 to 10 weeks? So usually, if the liquidity goes up, the price responds, and it's supposed to go up. So it's no guarantee of anything, but it's a very good sign that we're having this liquidity moving up, right? So we had a period of time where we were doing this correction. This is why I have these lines. The price was going down, right? Remember when we reached about 70K, mostly driven by the ETF FOMO. When we corrected, we went from 70 to about 55K. And I was hoping actually for a better correction, a stronger correction, maybe in the 50s, while the liquidity was going up. Because what happened in the past, every single time we had a bull run, we saw an excess in liquidity, in global liquidity. So basically, the purple line is a calculation of what the price is supposed to be, just based on the relationship between liquidity and price. And just before a bull run, that purple line, it's above a white one. The white one is just pure price, closing price. And you see is that situation is highlighted as green. In fact, you can say almost that the end of a bull run is marked by a switching between these two, when actually the price starts to do its own thing, driven mostly by crazy FOMO. And this is when your grandmother wants to buy, it calls you, say, oh, how can I buy Bitcoin, right? This is when you know that probably we are at the top. And this is red regions, and just before the bull run, we are in a green region. And this happened every single time we had a bull run, every single time. Here, for example. but with the exception of this cycle. And so this is why I started to, if you watch my previous episodes where I do my status of a market, I always say, I don't know about this. I like the fact that the price is moving up and there is all this excitement. Maybe we don't need a liquidity anymore, because now we have ETFs, we have Sailor, but I'm not sure we can go all the way to 200K, right? And I was kind of right. Now, of course, now we have also the, chaos created by the tariff situation that adds to it. But I think I was right in the fact that these two at least need to come closer. Are we going to have a crossing at a certain point? It's kind of interesting to remember when I told you June being when they more or less when we will know if we have a continuation of a bull. If this continues to go up, right, and this stays kind of more or less the same, this crossing will happen in June. Do we need to wait June? That is also about 2 months, right, 70 days away from us. So if there is a delay to when the price responds, it's kind of everything seems to converge to maybe next couple of months, the price stays more or less here, the liquidity will go up. Most of this liquidity, by the way, is everything else beside United States. The United States liquidity is not there yet, but there is some talk, right? The head of the Treasury Department say they want to decrease the interest rates, etc. So maybe once the United States will join, this curve will go even faster up. So this is probably one of the best signs we have right now that we kind of reach the bottom, and maybe the bull market will continue. Don't take it as written in stone, but it's one of the positive signs that I see. What do you think? What do you guys think?
Yeah,
Jump in
definitely.
there, Marcus.
Yeah, I think you're on point with that, Giovanni. That it's that liquidity disparity, that deviation is still a little bit too wide to give it the fuel it's going to need for that maximum projection of the 200K. We really need that liquidity and the price to get more. It needs to revert back. It's just a little bit wide right now, and that June timeline is meeting up with what we see in the general markets for liquidity as well. So it's very impressive how all of these patterns correlate together to make one story, one mosaic. So, yep, I agree that June horizon is right on schedule for maybe one last push. We might not get to 200, but the liquidity that we're seeing in the general markets are coming in at about 125 to 135. So that's what we see currently. It could change, but that's how it looks now.
Fantastic. Okay, and Costa, do you have some charts you want to see to show in particular what the algorithm has done recently?
Yeah, let's have a quick look. Just let me know that you can see my screen.
Okay. Let me double check.
Is that up? I think it's sharing.
Yes, I need to give. Yeah, now we have it.
Yeah, you can see. Okay, fantastic. So I just really want to run through our most conservative settings from just really the beginning. Let's go from kind of the end of Jan, because I think
And
this
I
is where the
apologize
price-
if guys, if it looks a little bit foggy. I'm using the highest resolution, so it's an automatic resolution. Maybe it's a
Yeah, I'll try
connection issue,
open things up.
but it looks good enough. I think people can see.
Okay, perfect. So this is just a perfect example of how we're able to generate returns no matter what the market's doing, but in a much safer way than shorting the market. Obviously, when you short something like Bitcoin, it adds so much risk as there's potential unlimited upside. So this is a long-only strategy that we're using. But basically, let's just have a look at the last, what we said before, if the market goes up, it's very easy to make money. You make an order, you take profit, you make an order and you take profit. What happens if the market goes against you? So as you can see here, and I'll go back to Sebastian in a second, he'll go through how the entries are made, but let's just have a look, for example, of how we're able to walk the price down from around 106, where we entered at around 104, all the way to the price we are now. So this is the initial order. It went against us. We just missed out on taking profit there. The green line there is our take profit line, and our orange line there is our weighted average price. So the market goes against us. We enter what we call safety orders. And you can see we're entering multiple safety orders. You can see the entries there, lowering that weighted average price. So our take profit was originally around 107. It's already down to around 102 in the space of just a few days. But let's have a look at this really boring period when the market was going sideways. So the market started consolidating. And as you can see, very, very patient. Discretionary traders tend to panic in these scenarios and tend to, make too many trades. The algorithm waits for something to happen. As you can see here, bang, 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 3 executed safety orders, bringing down that weighted average price massively. And we're able to take profit here at a price of 90,000. So just a reminder, we entered at a price of around 104 and we exit at a take profit of 90,000, which is pretty amazing. And then we restart at 92. You see the same thing, but what happens? The market rallies, we take a profit there. We enter again here at 90, and we've entered 1, 2, 3, 4 safety orders. We're already down to the 77K price point, and our take profit margin is 86. What does that look like in numbers? Well, to cut a long story short, we've made a profit over the same time period from the beginning of the year, the 1st of Jan, of 10%. We've generated 10% return. The buy and hold return is negative 7.91%. So as the market has been declining, we're able to actually generate positive returns during that same period. So when the market does something like this, we're able to outperform the buy and hold. As you can see, it's done in a very safe and very controlled way. I'll show you exactly how controlled it is. If we bring in the power law support, which is around, where's the power law support right now, Giovanni? Around 32, 35,
40,000.
40,000. This particular setup has around a 65% coverage. Therefore, we can handle, the price can drop to 31,000 and we're still going to be executing safety orders completely safely. This is why this is so powerful, is that our strategy, all the capital is ready to be deployed here, right? We're not overextending the initial order. We're keeping that extremely small and being very, very safe. This is one of the reasons why Giovanni likes what we do, is because we're literally, our eye is just focused on that downside. If the market goes up, like we showed here, it's bang easy to make money. Right? What happens when the market crashes? You can see, for example, what it looks like. We're able to generate returns and get out and literally walk the price down. Sebastian can dive into as well just how these initial orders and how these safety orders are made. We've got an interesting way that we have basically a mechanical DCA strategy that is further optimized by the technical indicators that we use that actually give us a better entry point than traditional DCA strategies as well.
Yes, I'll take over, and Costa, thanks for that. And there's a lot. This is the thing about our strategy, and I think what a lot of people are looking for is AI-driven predictive strategies, and a lot of that stuff is fluff. And really, in a lot of ways, what this is it's simplicity executed perfectly, and this is what Marcus likes to call it. And there is a lot at play here. So when we designed this, and another reason this algorithm really works well on Bitcoin is because it has people wanting to buy at lower prices, right? So by design, the system has been built to trade the market going down. That is its most profitable condition. It makes money going up, of course, but because the system has been built to inject most of our capital while the market falls, this puts us in a position where we're doing a couple things, right? The first thing we're doing is we're layering capital against the trend. Now, what do I mean by this? Warren Buffett talks about it very simply. Think about fear and greed, right? Now, what do retail investors do as a whole? Well, what they do is they buy at the top, because usually people buy when the news is going crazy. Everyone's talking about Bitcoin, just like Giovanni said. When your mum starts asking you how to buy Bitcoin, there's a reason that the top is there. This is because people are investing at the tip top. But people don't want to buy fear. They want to buy greed. Well, what the algorithm does, the algorithm is buying fear. We're actually buying when everyone else is selling, and we're selling when everyone else is buying. And by design, this inherently safe structure allows you to have success most of the time trading Bitcoin. Now, there's a lot of algorithms out there that by design are very, very good in an uptrend, but the wheels fall off them very quickly. And this is because they inject most, if not all, of the capital as the market is increasing in value. Now, very few people have the conviction or the ability to feel good buying when the price is falling. But the funny thing is that's actually the key to having success in this market. It's not following what the masses are doing. It's understanding to buy when there's mass fear in the market. Now, that being said, how the algorithm actually makes its entries is very, very unique. So what we do first is we set the mathematical coverage like Costa spoke about. Now, what this means is we set a range for the dollar cost averaging to go all the way to the bottom of the power law support. If we hit the bottom of the power law support, this is where most of our portfolio is going to be injected. So, we very rarely, if ever, have big orders at the top. Our goal is to have most of our money injected at the bottom of the power law support. So we're getting the opportune buying time, actually aligning with power law theory. And statistically, when you see large corrections on Bitcoin, statistically, the more market moves against you, the higher and larger your odds are of getting a rally. Now, on top of the mathematics, what I developed and coded with the help of Marcus was a system with 15 different technical indicators. We do have a couple security calls as well, which accesses a little bit of on-chain data. And what this does is you want to think about the indicators talking to each other. So we have 15 all receiving signals at once. Now, let's say 8 of the indicators are showing bullish and 7 of the indicators are showing bearish. But what that means is the indicators don't really know what's going on. So in that scenario, we're actually just going to lean on the mathematical structure, and the algorithm will just continue to follow the maths that is being laid out for it. But let's say all of the indicators are bullish or all of the indicators are bearish, then the actual indicators will take over and often get better entries. What this means is, I don't want to call this AI because it's not, but the algorithm does have the smarts to know whether it should be leaning on the mathematical deviations we've given it or whether it should be making entries potentially further in price. The beautiful thing about this is you can walk the market the whole way down. So, a big question people often ask me, how does it perform in a bear market? What are the bear market data and how does it go? Well, the point of this is built to run in a bear market. The point of it is to build it for catastrophe to happen. And if catastrophe does happen, we're going to make most of our money that way, right? And that's really the key here. It's not trying to focus too much on what Bitcoin is going to do on a day-to-day basis, because if you do that, as I did when I first started my trading career, you sit in front of the chart watching it every day. And when Bitcoin moves up 5%, you're bullish. And when it moves down 5%, you're bearish. You can't do that. It's going to send you completely insane. So having the power law, we know and all agree, like we believe this power law cycle is going to play out. But if it doesn't, at least we know the power law bottom is there and we'll be injecting most of our money at the power law bottom. We're not going to be spot buying Bitcoin at the top, right? There's something very, very powerful. And I'll end on this note here. There's something very, very powerful about being able to trade Bitcoin down and lower your average price to get an exit, right? Because remember, when you're spot hodling, you're always stuck at the price that you bought Bitcoin at. You're always stuck there. And if Bitcoin does have a correction, a major correction, the beauty of Bitcoin is you can hold it forever. But with this, you can actually walk your average price down in conjunction with holding the Bitcoin. And to me, that's the most powerful thing about this strategy. Thank you, everyone.
Thank you so much, Sebastian. Do you want to add anything else or make another comment? Because otherwise we can pass to questions. We can, and you guys can always ask questions and a few things to the audience. One, somebody's asking for subtitles. I'm not sure how to do that. The video should be already set up where you can get automated captions, but I will look into it next time if it doesn't work right now. But please ask questions. You can ask questions in all the different channels. You can do it on X, on YouTube, and we should be able to see your questions, and we're going to answer them in a moment. Go ahead, Costa, please.
Yeah, I just wanted to cover the question. I know, obviously, we're an international product. We've got a lot of people that we speak to from the US. We have a solution for everyone. Obviously, the system always works better if you're trading futures, perpetual futures, more efficient use of capital if you're able to use a tiny little amount of leverage. Usually, we don't go above, I think it's 1.82, some people 3x leverage. Leverage doesn't really make that much of a difference. It's really about the way that you're deploying the capital at different stages of the trading. But if you are in the US, just book a call with our team. We have some solutions that we can discuss with you. We're also working on a completely decentralized solution, which we'll be rolling out probably in Q3 of this year. But we'll make this work for you. If you get on a call with us, we'll go through all the options you have, no matter where you are in the world. Even if it ends up just being spot trading, we can also make this work on a spot trading account. Coinbase, Kraken, you name it, we can do it. So yeah, just use that link below and book a call.
Yeah, and I want to comment on this because on one end, you can use these solutions that are available to American people that mostly go around using spot, but ideally, the idea is, and this is what is appealing, was really appealing to me, is that you don't have to trade your Bitcoin. You don't have to buy and sell your Bitcoin. You use your Bitcoin as a collateral, and then you buy these contracts that are called futures. And maybe one of these days we can go in the technical details because we're also trying to do some education service where we are trying to explain to the people what all these different tools are, etc. So we can describe what futures are. But in general, are contracts where basically you're buying, these contracts where, they are linked to the price of Bitcoin, but you're not buying or selling Bitcoin directly. And the utility of that, the usefulness of that you can, first of all, use a little bit of leverage. We never do, that is also the beauty of it. We never use too much of a leverage because it's insane. We should never do that. This is a reasonable way of multiplying the volatility of Bitcoin, but doing it in a responsible way. For example, my trading right now is using something close to 5 pair leverage. And then you use just your Bitcoin as a collateral. Again, it is a risk to put your Bitcoin on an exchange until I'm very curious myself, very eager to see the decentralized solutions because this will reduce the risk of keeping your Bitcoin on an exchange. But you saw, for example, how Bybit is much more mature. I was trading with Bitcoin since many, many years, and I can tell you it was much more risky 10 years ago, 12 years ago, where it was the Far West, right? Right now, we see a lot of maturity where these exchanges are taking responsibility when something happens. So I was very impressed by that. But it's still a risk, right? But you cannot really expect any type of gain if there is not a risk. You want to handle the risk. You want to manage the risk. So don't ever try to do this with all your coins, right? Just do it with a small percentage, maybe 5-10%. And so you keep the Bitcoins there. And you see also it can be a little bit of cash, a little bit of Bitcoins. Right now, for example, I am all in Bitcoin. As I make gains with this system, I buy more Bitcoin. Eventually, if we reach a top, we discussed many times about this. Is it a good idea to sell a little bit of your Bitcoin so you can have some cash to buy at the bottom when we go back to the bottom? This is something that we can discuss, but this system allows you for that because you can use as a collateral a mixture of Bitcoin and USDT. In fact, even other assets if you wanted to. But I don't like myself. I want to be all Bitcoin or maybe USDT to buy more Bitcoin. But anyway, so we can explain you more as times go by, the details and how this works. But yeah, it's very attractive that you don't have to sell your Bitcoin to trade with this particular system. You can use it as a collateral. Anyway, why don't we focus on particular questions? So I'm going to highlight. So somebody's asking about quantum computing, but we can discuss it. Anything can be part of this because it's a open discussion. But I want to be more focused on the market and the trading system itself. So a focus investor is asking this: how do you access the trading bot? Costa, what is the answer to this?
Yeah, I just want to also go into the fact that we're more a trading system than an actual trading bot. A trading bot kind of implies that we give you something, you plug it in, and it starts working. However, what we've actually got is something more like a Swiss Army knife. It gives you the ability through TradingView to engineer a trading system that uses our logic. What we do is when you come in is we work as consultants to help engineer that bot, that system to work on your exchange. Once that exchange is the bot aspect is simply the execution of the orders. So, we work as a consulting team. We onboard all our clients one-on-one. We work with them to develop position sizing that's going to suit their risk appetite and also depending on how much capital they have to deploy. Like we said, we're able to engineer things in a very dynamic way. That's why we have Marcus on board. He's able to crank up the returns for people that want more of a high frequency style. The one that I showed you before is very, very safe. It's very much our most conservative setting that can kind of survive anything. But if you want to be more cycle centric and focused on a bull run strategy, we can even flip the script and short the market during a bear market. Again, that's not something that we give out of the box. It's something that people work with Marcus to develop that. But that's we really have the flexibility to give you what you want, but to do it within the logic that we've created. So it's much more of a system than an actual bot. A bot simply executes the trading orders. But I'll pass it over to Sebastian because someone also had another question which said, and of course, how do you access it? As that is just book a call with our team. So if you are just asking how do you be involved with what we're doing, just use that link and then you'll be able to book a call, speak to one of our guys. We do free consulting calls. But the next question, I think, which leads into this is that the backtesting of the strategy.
Sebastian, I'll talk about backtesting because this is important. So I don't know if there's any developers in here, but anyone that's ever developed strategies will understand that backtesting, it's important, but it's also very fickle. And there's a couple things that really need to be taken into account when backtesting. And one of the big things, I guess, when we started, we do a lot of backtesting on TradingView. And look, it is accurate for the most part, but it can have issues with slippage, with funding rates, with fees, with commissions, a lot of these different sort of things. So what we actually had to do to build a really accurate reprocessing environment, which is essentially, a Python backtesting environment, is we essentially built our own. And to answer your question, we've run tens of thousands of simulations of data. And, I guess by design, the way our system's built is because you have 5 or 6 different mathematical inputs that can create potentially millions of different calculations that can be done through the system, right? So, we do a lot of backtesting, but also for us, a really important focus is making sure that what we're seeing in the backtesting environment is actually translating to live testing with funds. And what a lot of people, if you've played around with backtesters before, I'm sure everyone, who's become a trader has, what you often find is that your backtester shows you something really amazing and you think you've, found gold. And then you run the strategy in a live environment, it gets chopped up and eaten alive and obliterated, right? So I think, it's very important to understand that backtesting is key, but it wasn't until we built a backtesting environment that showed us a result that we then went and took and put in a live market, and then it started trading in the live market and showing a similar result to the backtest. That's when we knew that we had something that was very, very good. But by no means is our backtesting environment perfect. And always remember, you're backtesting data and anything can happen moving forward. So the live testing is as crucial. And anyone that books a call with our team, Giovanni said at the start of the call, we put our money, where our mouth is. If you speak to anyone on our team, get them to show you their live accounts, and we'll also provide you with the backtested data, and we'll show you how it's performing live, and we'll also show you how it's performed historically too.
Yeah, absolutely. And I have worked myself for years on trading systems, um, with different kind of success, and I'm super familiar with forward testing, back testing. But given my experience, I don't know. I would not have cared how much back testing Costa and the team will have shown me. I would not have cared for it, right? Because given my experience, I know how easy it is to manipulate your algorithm, where you can get this amazing backtesting result, with particular parameter choice, etc., and show this. This is part of a deception that a lot of commercial systems have, right? I have to tell you a little story. I already mentioned this story in the past, but when the Minotaur team contacted me, they say, we were a little bit concerned about contacting you, because if you thought our system was trash, you will have told everybody. And they say, you were right, 100%. I will have told everybody, this, don't even talk to this guy. This is complete crap. Guys, right? I speak my mind about stuff like that, and very direct. And I told also them, look, let me trade with the system. I want to see the results. I will not mention. People were begging me, because I was sharing my results as I was testing it for months, and people were telling me, how can we use it? How can we get involved? I said, please let me test it. Let me make sure. I want to see when we are going up, when we are going down, and then when I feel confident, I will share it. That is part of my pledge, because I really care about the people that follow me. They are, my Patreon supporters, etc. So I care about all of you, and I would never have recommended anything that I didn't test it myself. Now, of course, it would have been better if I tested for 2, 3, 4, 5 years. But at a certain point, it's also a question of acting and using the opportunity. So, you can always switch it off. You can always switch it off if you don't like it. That is part of it. But so far I'm very happy. I brought in a dear friend of mine that is also an investor. He had amazing results. We ask for the evidence in terms of real trades. Don't. Yeah, it's important. It's an additional information. More information you have, better it is. So they can show you, I'm sure, of the back testing results, but it's more important to show you the real results. And I did show some. I can show you again, but we will have other show. We will be here every single Thursday, and so I can show you my chart. I can show you my friend charts. The team can show their charts, other customers' charts. But that I think is, and I want to see your charts. I want to show you. Tell me how this system does. Because we need also that kind of feedback. So this is why we are trying to be open, and we are doing this together. That is the entire idea. The goal is to create tools that people use, and they find it, something that helps them over the long term. That is the main goal. We are not running anyway. We all, and if this fails, we fail. That is the difference. We are involved with these things directly. You guys want to comment on this or add anything
Yeah,
else?
I think that's a good idea. Is that the data that on the screen is the data on the screen. The best thing to do is to run things yourself, use them yourself, and share your results with people. We're putting ourselves out there. You can see our faces. You can talk to us. We've given our system to people like Giovanni, who are, like you said, he would have been our biggest critic if it wasn't something that genuinely worked. So we're here to answer your questions, and we're here to give you guidance when you join. One of the questions is that Minotaur.
Why is it
Yeah,
so
look,
expensive? Yeah.
it's expensive. The elite version of the program is what we're discussing at the moment. That has full access, a one-time licensing fee to our algorithm that's shared with you on TradingView. We have had other products that we offer training for things like grid bots and that thing that have been cheaper. Maybe that's something you've seen. But what we're discussing at this high level with Giovanni is our full access to our full program. So if you want to discuss that again, you can book a call.
Yeah, and the guys explained this, right? So this is a high quality item, and what you're really buying, it's a team. You're buying us, in a sense, right? You're buying the access to our knowledge, our work. We are meeting every single week, and the guys have their own meetings, but they meet with me where we look at the market, we discuss what is going on, we are trying to come up with new ideas, we are improving the system every single time, because it's really an arm race, right? The market is doing certain things. There are many bots that are trying to compete with each other. And so we are always trying to push the limit, to the next level. And so basically this is what you're doing. You are supporting this team. It's like, it takes millions of dollars sometimes to develop a professional trading system. And you are accessing this professional team for a fraction of the cost, and so this is really what you're paying for, that you're paying for R&D and all the team that is behind, all the technical support, the people that are developing the code. Right now, Sebastian was just telling us before we started this episode how he's working around the clock to create a platform that will allow even a smoother transition between the signals and the execution of the signal. That is the other thing that I want to mention. Given my experience in trading systems, I'm not that amazing programmer, and mostly my programming is about data analysis, but I'm completely aware, because I work with a lot of teams, of all the intricacy of creating something that is able to execute, in particular when you're dealing with an enormous responsibility that is even indirectly like we do, because remember, you are in charge of we are not asking you to send your assets to us, right? You will keep it on the exchange, and you have full control of them. But we do trade, with signals. We give you the signal, and then the system trades automatically. That execution component is all. I always make an analogy, is like the tires of a car. It looks like a secondary component. Like you say, the tires are not a big deal. I'm not really paying. But if you have a Ferrari and you have crap tires, you can toss away the Ferrari because you will have an accident, right? That tire, the high quality tire, it seems like a secondary thing. It's as fundamental. It's really what makes the contact between the car and the asphalt. And it needs to be the best tire possible on earth, right, for a high quality product. And that is really the component that impressed me so much among all the other things, because it's not easy, it's not trivial. People think it's trivial, but how the Minotaur team handle that, it's amazing. It's really professional. It's among the best execution component that I ever saw in my many years of trading experience, automated trading experience. So that is the other thing that is really amazing. And it needs maintenance, it needs updates. So it's what also why the system has a price that is not $100 a month. We are not selling or telling you to be involved with something that is $100 a month. You pay for what you get.
Yeah, I wanted to add to that as well, because another question's popped up about jumping on a call. So there's actually two questions there. So I would say the system is not really for anyone who doesn't want to invest less than $10,000. It really is a 5, 6, 7-figure trading system or more. If you have less than $10,000, probably not for you. The returns just aren't going to be there. And what happens when we have people that have less than that is their expectations are usually unrealistic, and they're trying to generate more. And when you try and generate more, you're taking from Peter to pay Paul. You're increasing the risk, and they do so, in a way that's just not sustainable. So again, really, the price point for this is $10,000 or more. If you can't afford that kind of capital, you don't have that kind of capital to deploy, probably not a solution for you. The other thing is, why do we sell through a call? Well, the main reason is that we want to vet our clients too. Like, you're here to listen to us speak to see if we're real, but we want to speak to you to see if you're real. We want to make sure that you're going to be good to work with, because it does take one-on-one calls to get this working for you. We want to make sure that your expectations are in line and are realistic. And this is a crazy world out there, and we are dealing with cryptocurrencies. So we also want to speak with you to make sure that you're someone that we want to work with. Like Giovanni said, we've spent a lot of time and a lot of energy going through this and figuring out the best way to do it, the safest way to do it. We've got some of the best minds in Bitcoin and in trading that have worked on this. So, we don't want to give this to anyone. We want to make sure that you're actually a good fit for the company for us to work with as well. This is a really important point. A lot of people don't get it, but you have to understand that we want to be able to work with good people. This is not for everyone, and that's fine. Like Giovanni said, this is just a tool. If you don't want to have access to this tool, you don't want to use this tool, that's fine as well. Use something else. We're here for the people that can see the value and that want to take advantage of that. And in order to do that, you've got to jump on a call. You've got to talk to us. We've got to have a conversation to see that we're a good fit.
Yeah.
And, just one final point from me. I think a lot of people are looking to be told, can I take $1,000 and turn it into $1 million? And we're here to tell you, no. And that's not what we do, right? This is not get rich quick. This is tools to assist you trading your Bitcoin and have sustainability and longevity in the market above everything else.
So everything that we are discussing, it's all based on reasonable goals, right? So, for example, we are talking about with the team, what is a number that we can give you as a reference? We are talking about 3% a month. And in fact, there are, if you talk with very experienced traders, if you tell them 3%, they will accuse you to be a scammer. We had that experience with some people that have a little bit more experience. They were burned out, and they tell us, no, 3%, what are you talking about? 3% is not achievable. Well, it is, if you know what you're doing. But, see how that is different from people tell you, oh, because I get bombarded, because of what I'm doing, because of my selection of YouTube videos. I get bombarded by ads all the time, and immediately can tell this is a scam. This is a scam. 90% of what I'm supposed to is clear scam, because we are talking, oh, do you have this amount of money? Well, can make you a millionaire, right? What are you talking about? We are not talking that, right? We are talking about, look, there are things that you can do rationally to little by little, if you have patience, to improve your position in terms of owning Bitcoin. That is the goal, right? We would like to have more Bitcoins. And this is one of the tools, or many tools that you can do. You can teach yourself how to do options and things like that. And at a certain point, we can also discuss it as a group, to give some ideas or alternative for people, because it's not all about selling stuff. Today, we are spending a lot of this time because we are introducing, but we want to be ourselves, useful to the community as a team, to help people to improve, their financial situation, but without giving you fantasies and FOMO, etc. Because otherwise, I will not participate in this at all. So you have to have realistic expectations. About the 200K, just to change a little bit the topic, right? I said that it's still in the possibilities. It's still possible. Right now, like I said, yes, you're right. 0.3 starts to go in the territory. When we started the bull run, we only needed 0.2%, just to give a reference. In November, if we went up on a regular fashion, we will have needed 0.2% a day. Now, because of all these other things happen, it's 0.3%. In June will be 0.5. After June, we start to go to 1%. It's going to be less and less likely, right? So the main question is, are we going back to the general power law? If that prediction that there is a delay between the liquidity and the price is true, in a couple of months, so about June, we should go back to 95, 96, maybe more, because it's not one-to-one. I made a model. I will share it next episode, where I'm using this power law between liquidity and the price, and that is a prediction. Because if it is right, we have like a 10 weeks ahead predictive power. I'm skeptical because it seems so too good to be true, but this is what that model says, that we go back to 97. Now, once we go back to the power law, we will see. By power law alone, if we follow the power law, we go back to the power law trajectory, we should be 130. So without any deviation, 130 by the end of the year. So this is what it is. And this question is about time frames. Go ahead.
Yeah, one of them.
You were saying something, Mark?
Marcus can cover this question as well.
The time frames. As we said earlier, the algorithm is like the Swiss Army knife of trading systems. It can be configured to any conditions or any type of strategy. That's why we sell it, and that's the way we market it and make access the way we do. It has to be. There's a process to how you have to execute this algorithm. It's advanced. It's powerful, but it can trade on any time frame. As Costa showed earlier, we run a basic version of it that's very safe. It's very automated, more hands-off at the 15-minute time frame. There's also one other one up there that's talking about pricing transparency. Costa already mentioned that we have mentioned the budget that's necessary, right? Costa was about what, 10K.
Correct.
If you're not prepared to have that type of resource, then this is probably not a good fit. We don't just project the price in advance because this is an advanced trading system, and it has to go through a process of vetting the people that have access to it as well. So, yeah.
I want to comment. Okay, go ahead, Costas.
And to add to that, there's full transparency when people book a call. There's, jump on a call with one of our specialists, have a call for an hour. We'll go over everything with you in detail.
Look, it's actually the opposite. And I understand, right? First of all, everybody should be super suspicious about everything, right? Up to a point, up to where your mind is so closed that now everything is a scam, because that is the opposite, right? It's never good to be the opposite of anything. But your default should be always be suspicious, not suspicious, but at least, neutral in terms of understanding where people come from, assume that there is something wrong, but don't do it in a way where you put blinds on yourself, right? But yes, ask questions, don't trust anybody. There are people that tell me, oh, Giovanni, I'm going to do this because I trust you. Absolutely not. Don't do that, right? Know that I tested it, I'm happy, I like it, and I give you this recommendation. This is all what it is. But then you should explore it yourself. You should try to understand yourself. And that is one of the reasons why we want you to do the call, because it's an opportunity for you to ask questions. We could say all kind of bullshit and tell you, oh, do this call, to sign up. Here is the way to sign up, do this, etc., and not give you all the feedback and the interaction. We are telling you it's a process where we create a relationship, and we want you to call so you understand what you're buying, or what is the service that we offer, what is the type of relationship that you're going to have with us, and vice versa, because there are certain people that simply will not qualify. We don't think they have the resources, or the time, or the focus, or the right approach and attitude, because if you're coming to us and say, hey guys, I would like to make $1 million, starting with that $200, can you do that? There are some companies that tell you, sure, of course, here. We are telling you, I don't think, you're prepared for this.
Hey, Giovanni, remember we've had conversations of, like the Magellan Fund, this is an advanced system, and there's the mindset where we want to just trade it for our own private clients and ourselves, right? We don't. People have to understand there's nothing for sale. This is not for sale. This is not a public retail. The only reason we're mentioning this is because our relationship with you, and you're a private audience. Exactly. This is not something that's just being hawked out here to the general public. That's not what this is. There's nothing for sale here. So just want to make that clear.
And he's mentioning, Marcus is mentioning this fund that is one of the most successful funds. By the way, they called it the largest physics and math department in the world, because this guy Simon, he was a mathematician, and he won the equivalent of a Nobel Prize for math. There is not a Nobel Prize for math. There is this thing called the Fields Medal. He won the Field Medal, that is basically like in fact, is $1 million. Is a $2 million. Don't remember. It's 2 times the Nobel Prize. When 2 times what you get for the Nobel Prize, and he won that. And then he just hired astronomer, physicist, mathematician. He didn't even argue if you were a financial person. Only people with art tech type of degrees. And it's literally the most successful fund ever. And you know what they did at a certain point? They didn't even give access to anybody else and beside the people inside the company. So it was like a very private club where you were lucky if you got access to it, right? We are not saying that is this private club, but we want to create a relationship, where basically goes in both directions. This is why I think I will say that it's the opposite of being non-transparent. We are super transparent. We are showing you everything. We just want you to do this effort to call and start this relationship, going from both sides. And then you will have all the information that you need. I think actually it's a sign of, being professional. It's the opposite of what you think it is. And it doesn't cost you anything. Do the call if you think it's interesting. And nobody's forcing you anything, right? They don't put a gun on your head. You don't have to sign anything, In fact, it's an opportunity. Take it as an opportunity to ask all kinds of questions, test the people, they're talking to you, ask any critical question that you want to ask, push them, and see if it is something that is useful to you, It's all.
That's right.
Awesome.
Maybe we take one more question and then we will be here next week. So
I can cover this. Yeah, the 10K minimum. Technically, there is no minimum what you can invest with. We just say it doesn't really make sense to do it with less than 10K. But that doesn't include our licensing fee. That would be on top of that. But 10K is the minimum that we think you would need to start. You need deployable capital of at least 10,000 to make it worth your while. Yeah. And I think Sebastian can probably cover the next question if you just want to click on that one, Giovanni.
Yeah, exactly. This is what I was saying that you're paying for. We are your team, right? We are your team, and this is what the license not supposedly, but what it does. It's part of a description of a product that you have. All of us as a team available to you, where we are working hard to improve a parameter. If there is a changing parameter, changing market condition, we are doing that. We are going to have a call with you where we set up. You don't have to set up these things for yourself, because I'm aware of a lot of these bots where they give you the product and then you have to figure out how to set it up for yourself. It defies the purpose. And then there are Discord groups or the Reddit group. Oh, use this parameter, use this other parameter, and you don't know what to do. I know because I developed the code myself, but also for curiosity and also because I wanted to understand better the market. I joined some of this group, and it was one of the most frustrating experiences ever, because everybody, I have this setup, it really works. Okay, yeah, and we try and it didn't work, or work for a few days and didn't work a few days later. This is not what is going to happen here, because you have a professional team that continuously works to try to do the best we can. Yeah, go ahead.
Yeah, if I can add to that, I've seen a lot of these products, and you become part of a community. What's good about us, you don't have to join any kind of community. We work with you directly. You don't have to share anything with anyone publicly. You don't have to be involved in some group where people are working together with you. It's very simple. It's very private. You get one-on-one consulting. We work directly with you, and the results are yours. You get to keep 100% of the profit as well. Another thing that's very interesting that we haven't outlined is that this is not a profit share model. You have full access, lifetime access, license to future upgrades as well, maintenance of the product, and you keep 100% of the returns. The other thing is that you're not sending us the funds. You're working directly with your own exchange via API. So we do not have any access to any of your funds as well, which is one of those funny things. The word scam comes up a lot, but apart from a licensing fee that we're transparent about, there is no way for us to even control your funds, touch your funds, or anything. So that's impossible too.
And Costa, you were telling me, because I asked you this question some time ago, what will happen if, in the very unlikely case, because all of us want to work on these for the next many years, but what happens if for whatever reason the company doesn't work anymore for whatever reason?
It's good. So we've got a contingency plan for that. Touch wood, something happened to every single person on the team. We've got conditions in place where we would perpetually continue to provide access to the algorithms on TradingView, which costs very, very little, and you could share it with really an infinite amount of people. Secondly, we've also got to back up that if anything did happen to all the team, that we could actually give access to the source code, which would give perpetual access to clients forever if we were to be there. So it's very, very easy for us to simply do the ethical thing and give people what they paid for forever. That's the simple answer to that.
Very good. And we can have this in writing, right? It's part of a contract where people sign.
Correct.
Okay. Yeah, so I think we covered a lot of topics. We can maybe close here, and we can come back next week.
Next week,
yeah.
Fantastic.
Awesome.
So, thank you so much, guys, for participating. And by the way, about the community, on one end, what the Costa said is right, because you don't have to participate and trying to get people telling you what we are doing and sharing. But we do have a community with the Patreon, right? So a lot of the people that have already signed up belong to my Patreon community, and we do have a dedicated channel where we discuss the algorithm, share results, etc. So it's up to you if you like to be part of a community. That is an additional thing that we have.
Correct.
Join. Plus, the Minotaurs guys also have different levels. We can discuss maybe another time the different level of participation. Where you can go deeper and deeper, and you can learn about the trading system. You can learn about trading in general or investing in general. So we have different levels of participation and involvement, where we are spending more time with you, working with you, maybe, basically becoming a partner with you. But there is a community in my Discord group. And again, you can access it through, becoming a Patreon supporter. And in that Discord, we do have a channel dedicated to Minotaur, where Costa participates, I participate, share results. So, if you need additional information or you like to be part of a community, because we actually want you to share your result, right, if you like, with the other group and tell, maybe make constructive criticism, or maybe celebrate with us your success, so you can participate to that group too.
Yeah. And I want to say something to anyone who thinks that they're priced out of a product like ours. The best thing to do is to join Giovanni's Discord community and get his indicators. There's so much value in what Giovanni's doing, and the amount of time and work that he's spending with his clients in the Discord. He's giving people so much. Again, we're kind of like the next step up. If it's not for you now, it might be in the future. So, to anyone who's listening and watching, I think the best place to start is with Giovanni's subscription to his Patreon.
I want to really back that
channels.
as well.
Yeah,
it's a really good point. And I'm someone who, on the path to developing profitable systems, had a lot of pain, spent tens of thousands, if not hundreds of thousands of dollars on bogus rubbish. And really, what Giovanni is offering you, it's invaluable information, and it's not a big ask for what he's giving you. It's really some of the best stuff out there. So I want to back that as well.
Yeah, and I hope people appreciate that, because all of us, right, and this is one of the things that made me connect with Costa and Marcus, everybody. Like I called Marcus, I say, "Hey Marcus, are you available for a call?" Sure, and he has been incredibly patient, and he's we're having this call, and he's teaching me, he's teaching me about the algo, about the market, how to think about these things, all of them. Sebastian, Costas, we were talking about options. We are all interested in learning about Bitcoin. We are all Bitcoiner enthusiasts, and we spend a lot of time with the community. We all of us are super generous with our time, and that is how I want it, because I wake up in the morning. It's not just my job; it's my profession. My passion. And I care about your success. All of us care about your success. Because it's our success also. We are all in this thing together. So anyway, thank you so much, guys. I think we had a productive meeting, and we will be back next Thursday. So this will be a regular meeting where we discuss all these things: the market, the algo, performance, and other things like that. Okay.
Thanks for having us, Giovanni. We really
Thanks,
appreciate
everyone.
it.
Bye.